catch up with NVIDIA. It's the top tier liquidity asset in the world. And when we see the market, we always finding which is the best liquid market. And if you want to find more data, you can find in our website. And how we think of the future, in these directions. First one is ETF and halving. Since the issue of Bitcoin ETF, we have saw the 34% increase in the number of Bitcoins, and the cumulative total net flow have in 12 billion in the market. It have give a lot of confidence to the industry and a lot of newcomers coming, and we will see more and more net flows in the next half and next 1 year. And it's happy that we can have the meeting right now and talk about all the topics. And I think ETF issuer is the top one drive in the past 3 or 6 months. And we also cannot ignore the halving. Previously, everyone said for halving, the impact will be declined every time. But we think instead of solely focusing on the numbers, we must pay attention to the value of block reward. We can find in every halving the value, the block value, it's increased a lot. So imagine it's like a system, and the market cap improve. It means you bring more value from the field world. So every halving will affect this industry a lot. And for more details, we can also find more insights on panel 1 with
在今天的这一个圆桌讨论当中，我们会很多专家的一些独到的见解。那么现在我们看到，我们现在
we are seeing that in the last 3 months, the ETF trading volume almost catch up with the Binance BTC USDT trading volume, the most liquid market in crypto world. And we are seeing CME holds the largest share of Bitcoin open interest. So we all find is the power of compliance. All of our industry need to be compliant. And for us, we plan to work with AsianX, the institutional-only digital asset exchange, and which have strict regulatory compliance, and it will improve the trading experience for all the institutions. And next slide is custodian and banks. If in the past several years, we find most of us cannot hold the digital assets in a security way. We must find a third-party custodian to solve the security issues. And it's happy today we will invite the top custodian and banks service provider to see how we can make this industry more secure and how to minimize the counterparty risk is the top tier thinking when you address the digital asset. So the custodian is make you like low the counterparty risk from the exchange, and from our side, we also
低的这种解决方案。
binary market.
那 所以我们最终也是会和这个Finery Markets 来合作。那 Finery Market 大家也非常的熟知了，它是一家非常著名的非托管和加密货币 ECN 和交易软件的提供商，那可以为我们提供很多非托管以及结算后的交易的解决方案。那其实我进入这个行业呢，已经有6年了。那么其实我们看到，在这个6年的期间，整体的交易的流量其实并不是那么好。那所以我们会看到这些市场的数据和这个这些交易来看，在客户端和这些交易之间，它会有一些延迟。那所以其实对于我们来说，从100毫秒到2毫秒的这个延迟的一个改变，对于我们这种去中心化的交易所来说是非常重要的。所以我们会看到，现在我们这个行业所具备的所有的这些基础设施、技术，还有我们的信息，都变得越来越成熟，可以大规模的在市场上来去进行使用。那因此，我们也相信，接下来的这些数字资产的交易和加密货币的这个市场的竞争也将会越来越激烈。那所以我们该如何来去进行这种分布式或非分布式的交易呢？我们都可以找 LTP 来为您提供一些解决的方案。那么当然，我们也会在今天的论坛的这个圆桌讨论当中去了解更多专家的一些见解。那同时，我们也相信 RWA。它有非常庞大的一个潜力，那还有一些新的概念啊，比如说CDFI。那所以其实在这里很多大家都已经非常的熟悉了，包括 USDT 等等，还有我们也会讨论到像我们的这个代币化的一个发展，包括我们会提供到一些代币化的解决方案，像那所以在讲到代币化的时候，我们看到其巨大的潜力，我们可以在链上来拥有更多的资产，所以不仅仅是加密货币。那同时我们也看到一个新的。
access to some protocols and
DeFi
via third-party custodian and get the access to the exchanges, and they can get the yield from the centralized exchange, and it can benefit from the client on chain. It's also a good like a booming market. Some projects are doing the things like this. It will diversify the asset on chain. Also, when we are addressing the liquidity, we can find different values.
流动性的问题的时候，我们也是需要去关注到的它的一个资产的效率。那么，所以在这里 ，CeFi 和 DeFi 我们会看到有很多这样的供应商。那所以我们会看到，我们会来去再进行一些分类。然后也会有专家来去和我们分享。那在这个行业当中，我们现在还面临着哪些挑战？我们应该如何把这些不同的服务整合在一起？那它可以把这些服务构建在一些托管和银行服务上面来去搭建。
It will give the liquidity access to spot and derivatives.
推出一个 Prime Block 的这样一个系统。
Also, we will enforce this technology layer this year to do the cross exchange, cross margin, and to make the traders can benefit from the maximum trading efficiency. And that's us. We are a top prime broker in APAC and want to serve more regulated institutions. Okay, thank you for your time.
谢 come to the stage is somebody that I like to think of as the chairman of tech in Hong Kong. And you're like, why the chairman of tech in Hong Kong? His official title is that he is a member of the Legislative Council of Hong Kong, chosen by his peers in the technology and innovation sector to represent them to the Hong Kong government, to be the voice for the industry. But he's also an entrepreneur, an investor, the chairman of the Le Yun Company, which has a special place in the hearts of Hong Kong people. But why the chairman? Well, he's the chairman of Le Yun. He's also the chairman of a leading advisory to the Hong Kong government on technology and innovation, chairman of committees to Hong Kong's leading science and technology university. He is the chairman of the IT Services Committee at the Hospital Authority that is responsible for the health and well-being of 90% of Hong Kong people. He takes on all these roles and many more, but he has taken time out to come and speak to you today. So ladies and gentlemen, please welcome the chairman of Tech and Innovation in Hong Kong, as I like to think of him, the Legislative Council member for Technology and Innovation. He is the Honorable Duncan Chu. Please.
Thank you, Andrew. Actually, the only chairman I'm in real capacity of is Hong Kong Squash. So if you want to play squash, if you're interested in sports, come find me. I'm the chairman of China-Hong Kong Sports Association in Hong Kong, a great promoter of the sports in Hong Kong. So thanks to Jack and Ethan's invitation. Basically, I originally wanted to save my speech for the Web3 Festival tomorrow, because I'll be speaking at the opening ceremony. And this year, I would say, really welcome everyone coming from abroad. We see really a great crowd coming to HongOng for the whole Web3 and digital asset discussions. I look at some of the numbers that we have, comparing to last year where we have the first year of the Web3 Festival and a lot of concurrent events. We have actually more than 20-30% growth in terms of visitors coming to Hong Kong. So I hope you all enjoy the scene. And I pick out some part of my speech tomorrow and want to share with you. So why are we here? I think, as Andrew said previously, I was an investor myself. I remember 10 years ago, I was actually in Silicon Valley looking at a lot of the crypto-related or blockchain-related investments opportunities. I think at that time, when I was with the crowd over there, I would say that 90% of the crowd were actually tech natives. These are all tech developers, more than 90%.
当时在那里，我看到有非常多的人在做技术，90%的人其实他们是当地人，做了很多技术开发。现在我们看一下香港在发生着什么，有这么多人才，也有很多人从其他地方来到香港，在这里金融界一直在快速，金融界可以说正在经历转型，有来自不同背景的人，有来自不同背景的机构。我认为在多可以将这一行业发展得更好。这里边提到人才，我想说的是，有很多金融界人才，他们有技术背景。技术非常重要，我们希望通过技术来进一步发展。看一下过去几年发生了什么。破产了。在1年时间
the technology-led innovation is there, but there's something missing. So maybe we need more regulation, we need more legislation, we need more governance, compliance about what we can create, because this industry, blockchain-related digital assets, is all about people's investment.
用不同的技术，比如区块链，比如数字资产相关的技术，这些都与投资相关。那我们真的是可以建立非常好的技术平台以及健康的行业，让大家可以依赖吗？我觉得这非常重要。我们需要从金融专家那里获得真正的指导帮助，我们也需要更多的技术创新。这里其实我就谈的是金融和技术的融合。
that we have gone through, and this will shape the next 10 years of blockchain, digital asset, crypto market coming along. And comparing to AI, take AI, technology as an investor myself, I think all technology actually take a long time to get into a really mass adoption by humans globally. AI, we talk about AI, it took like 60 years for us to get to this stage where we have transformer, we have generative AI, and then we have more money pouring into the AI development, and the real deployment has yet to come. And comparing to AI, I mean, blockchain is just a baby. The theory was laid out in 1980s, but actually the first sort of adoption, we all know Bitcoin in 2009. So it's only 15 years old for the crypto market. And, there are a lot more development we will expect. And, people have experience with crypto. It's only a small part of the global population. And, we want to see a global conversion, then you need several things. One, we need guidelines, discipline. People will trust, faith in the system. More scam in the market will only have big setback in the development. So we need actually people who understand how finance works come in, because this is related to investment. Second, I think Jack also mentioned, technology has to improve. TPS, security, cross-chain, how do we govern?
了解金融系统如何运作，他们了解投资，了解技术。Jack 刚才也提到了相关问题，在 TPS 安全性、链上链下和跨链安全，我们在治理方面有层次。那从浅层到深层，我们必须在技术和监管上做很多事情。技术和监管迈向未来两条腿都要长。我们需要通过技术将资产更好的放到去。我们要考虑当前的生态蓬勃发展。那再看一下，展示了非常多的 logo， 有这么多公司方扩张。我想，境况是我们希望人。
making some money from speculation. So these community has to grow. We have to improve the technology itself. Doesn't matter on-chain, off-chain data, or how we exchange data, how we create new tokens and different use cases. So these are things we have to work on next. And there's how do I go back?
我们在创建新代币的时候，要考虑不同的用。
not as exciting deployment of blockchain, but I think this is really important for the development. We cannot just focus on the crypto side, where we are creating trading opportunities or investment opportunity. But looking back, the fundamental is how blockchain was being used and deployed. So there were programs by different governments where they launched program by leveraging blockchain into city management, gaming, trading. I think this is important because the line between fiat or physical assets with cryptos or digitized assets, there need to have more interactions and collaborations between the real world assets and also the virtual assets to actually get the whole system flowing. So how do we get more data on chain? Doesn't matter is the road traffic situations, or the assets in banks, a real road property. I mean, getting more data or use cases on chain, and in the end, they will create more interaction between fiat and cryptocurrency. So on the process of building more real life use cases,
交通状况，或者是铁路资产，亦或是其他资产，我们如何上链，在链上获得更多的数据，支撑更多用力，最终法币和币之间可以有更多现实生活中多用力，在这一过程中，用力实际上在增。
A study from BCG. This is apart from the cryptos, where Jack mentioned the crypto the valuation today is around 3 trillion. Just looking at providing digitized or blockchain solutions to other asset class where we can actually tokenize or digitize. is actually another market we can explore into. And real world assets, things like DePIN and many other asset class, even stocks, equities that we can tokenize or digitize. Just thinking of all these things in real life being tokenized. And in future, this can interact with stablecoin and cryptos that are being created that provide circulations. And actually the real use
进这样的代币化处理，我们想想，现实世界中有多少东西可以代币化？去创造稳定币
among the process of having crypto
与币如何
improve
作用？
technologically, improve in TPS, improve in security, improve in the way you can trade, improve in the system. We have to at the same time provide more tokenized solution for real world assets. So having all these real items tokenized, and there will be interactions in the end with crypto. So this is things that we have to work on, and Hong Kong is the best place because we have established financial systems. We have numerous financial experts in Hong Kong. We have a system, we have law that you can trust. So providing that, these are the huge market we can build in Hong Kong. Just in Hong Kong alone, assets that we can tokenize, thinking about in the next 10, 20 years, where, it's just digitizing a lot of the real world asset, but it is more low cost, it is more efficient, it provides transparency, ease of trade in different geographical area, right? Think about you have a house in Hong Kong, and you want to sell, you can only sell through a broker in Hong Kong to a person in Hong Kong, most likely. But if you digitize or tokenize an asset, you can actually skip the lawyer, skip the commission, and you can sell partially real world asset to someone in Europe, in US, and vice versa. So this is the tokenized solution for real world asset, where, a lot of people working in crypto will say, that is, slow in terms of appreciation or depreciation, ups and downs. But you look at the advantages of tokenizing real world asset, the advantage is still there, and there is still demand for real world asset in the end. So, and that will also stimulate the need for crypto, because there will be transaction in fiat and will be in digital currency. So having a lot of the real world asset tokenized is definitely one thing in Hong Kong we can do. And as I mentioned, these are the items we actually are looking at, think that we can do tokenizations in Hong Kong. Next step, maybe security products that we can look into those, but it takes a learning curve. And the thing is, in Hong Kong, when we are developing the Web3, we have to do it a step-by-step role through the licensing, where the regulator can also learn, the behavior of the industry. We don't want another FTX to happen, which will be a big setback to the industry. So a step-by-step and healthy improvement is the roadmap I think Hong Kong is actually taking in. So what have we actually done? I think for Hong Kong government is actually one of the fastest pace in terms of legislating on the new asset or technological development. Our financial secretary issued the statement in 2022, October. So if you look back, it's only 1.5 years. And we already have the legislation of virtual asset
香港政府的立法速度可以说在全球都是排在前列。财政司司长于2022年10月发表声明，就提了相关的事项。大家回顾这样的历史看一下，其实那仅仅是1年前的事情。现在我们已经有了虚拟资产交易平台的立法。那这样的平台是免费的，只是今天去免费获得。
Hopefully that will be in another year we'll wrap up that, and there will be major stablecoin issuers in Hong Kong. And we are undergoing the virtual asset OTC, which is the physical trade of virtual asset legislation consultation. So I think in the afternoon, Custom will be here, right? So they will also, they're actually running the consultation paper, and that will be tabled to Legislative Council for discussion and
将
approval
会有很
possibly end of the year.
币
So I'm also advocating for the VA custodian regime. How do we
而
do
我们提到
custodian
虚拟资产的立
licenses
法，
in Hong
还
Kong?
有实物交易与虚拟交易的结合，我想今天讨论中会涉及到，也有非常多的咨询文会提交给立法会讨论和批准，可能就在今年年底会有进一步的举措。刚才我们也听到有专家提及托管银行。
What can be traded, who can buy, whether this is for professional
那在
investors
香
or for retail investors.
现在是有非常完善的体系获得，在香港我们有完整的监管和治理。我们认为监管和治理行业快速发展很重要，这样的角色不能缺失。一旦一切都做好，一旦我们有交易平台，我们就可以开发出不同的产品，而证监会也可以履行他们的职责。在香港，我们就可以进一步去推更多的代币化项目，不同的产品、不同的资产都可以进行代币化。那无论是专业投资者、机构投资者还是散户，大家都可以参与其中。整个行业的发展前景是非常清晰的，政府会做非常多的代币化安排。那我们已经做了很多的尝试，金额是非常高的。在代币化绿色债券上，我们做了非常好的项目，这是非常好的例子。我们提供数字化解决方案或代币化解决方案的尝试，其实现在是走在全球前列。那我们有稳定币，还有非常好的托管安排。我认为这其实是填补了过去在这些方面的空白。我们也会去看一下，电子或者说数字人民币，这也是政府非常关注、非常努力推动的一项工作。那更广泛的说，这是 CBDC 相关的项目。那我认为政府正在全力以赴为 Web3 提供更多用力。我们需要做什么呢？我认为技术发展很重要，政府需要进一步去坚持当前的发展方向。那稳定还有透明度都非常重要。我们在这里其实需要吸引更多人才，我们需要更多人才加入到我们高度自由、高度开放的生态中来。到目前看来，我们有非常多的人才加入香港这些项目，我们仍然需要更多的人才。那这些人才过来之后，可以为我们金融新的发展做出贡献。他们可能有金融背景，也可能有技术背景。那专业人士共同致力于新产品和新用力的开发，这是我们进一步发展的基础。在未来，我们希望有更多团队来到香港。我想，这是政府非常期望看到的场景。正如我刚才所说，我们会有进一步的安排来保护投资者、保护用户，创造更多的用力。那香港政府在本地提供更多的代币化解决方案，这是非常明显的趋势。那今天非常高兴看到这么多的朋友参加这场活动。那香港其实是非常理想的城市，在这里该行业可以快速发展，这里也有很多乐趣可以享受，在金融等等方面，在七人制干球方面，在拍卖、在艺术等等方面，香港都是欣欣向荣的。
所以我想，对于我们的高科技公司来说，香港会是你构建自己的市场以及构建你的技术唯一的目的地。那其实有很多的这个参与者，他们都在不同的城市待了很多时间，那知道该。
And thank you very much, Duncan. That's great. And I mean, what a huge portfolio this guy has, whether it's fintech, biotech, art tech, rugby tech. Is that a thing? I don't know. Digital asset, this man does it all. Thank you very much for your service, and thank you for coming to join us here today. Note, we do have some seats mixed in and among. It's a polite bunch, I'm sure, so if you're at the periphery, we're doing exchange, so if you want to come and grab a seat, we've got some over here. Don't be shy. I'm sure these guys are very nice and they'll let you in. So we are preparing for our next panel, our first panel of the day. We're going to be talking Bitcoin. We're going to be talking about the halving, as I said earlier. It is coming April 19th, perhaps. We'll see when it happens. We're also going to be talking about Bitcoin spot ETFs that are coming and making such a huge difference in the space right now. We've got a huge panel, great panel coming up to talk to you about it. Your moderator today is going to be Sean Lawrence. He's the head of APAC for Keiko. And if you're wondering one more time, Keiko, not Keiko, it's Keiko. So he's going to be joined up here on stage by Donald Day, who's the Chief Operating Officer at VDX. Angelina Kwan, who is the Senior Advisor to IMC Asia. We're going to be welcoming Chris Arulia, who's the Managing Director at Wincent. And to round out this panel, Head of Institutional Sales for Coinbase, where I still have some of my oldest crypto holdings, is Wilson Cheng. And our panel is ready to go. Sean Lawrence, ready for action. The floor is yours. Go get him. All right, good job. All right, please. There we go. All right, go get him.
Hello. Welcome, everyone, to this panel talking about halvening and spot ETFs, and kindly hosted by liquidity tech providers and Gate. I said I'm the head of Asia for Keiko. We do market data, risk analytics, indices, and research for digital assets. And I'm joined by the panel who were introduced. But just to kind of give you some little bit more color on the individuals and the kind of things that we want to talk about today. Don runs Victory Digital Exchange, aspiring VATP in Hong Kong. He's got a long experience in history, SFC, Quantex, capital markets, Sagenti, founder为证监会的一个工作的经验。Angelina 是在香港是非常有知名度的。那主要是活跃于数字资产方面的交易。那其实他自己也是咨询公司 Stanford Finance Chapter 的创始人。那曾经也是在证监会工作过。还有 Chris Arulia 是Vincent的总经理。那其实他是我们一个非常大的一个对冲基金。那主要是专注在BCB 所推出的数字资产的这种高频交易的策略。那么最后他也是在 Web2 以及金融科技开发方面有着非常丰富的经验。还有 Coinbase， 那 Coinbase Prime 也是我们现在非常著名的虚拟资产交易托管服务机构之一。那么所以之前也是在渣打银行、瑞士信贷工作过，有非常丰富的传统资产金融的经验以及虚拟资产的这些经验。那所以对于我们今天的这个讨论来说，我们看到我们整个观众也是来自不同的公司。那我们也会看到，在这个行业正在发生非常大的一个变化，产品变得越来越精致，更加的规范，也值得信赖。所以在这样一个广泛的背景下，我们可以先来讨论一些话题。那么首先，那就是对于我们机构来说，有一些监管和合规的因素需要去考虑。那特别是在提供虚拟资产的托管和银行服务的时候，那所以在这一方面，在监管和合规方面，我们需要考虑什么样的内容？好，谢谢，非常感谢您的提问。那确实，对于这个数字资产来说，在过去的几年当中，其实成熟的非常快。因为几年前我们都不会有这样的一个圆桌讨论，就这个议题来专门展开讨论。那所以其实我们会看到，香港它
and is far ahead of other international financial centers. Regulation moves actually quite quickly, especially when compared to how it moves in other asset classes. So institutions usually don't operate just in one jurisdiction, they usually operate globally. And while the regulators across the world are addressing this with the same goals in mind, they go about it in slightly different ways as per their mandate. So what institutions have to do, they have to sort of like find their position in a rapidly evolving asset class with a rapidly evolving regulation.
his heart called out, and he had to return to his native China. In 2014, he returned to China to come to Hong Kong and the Hong Kong University of Science and Technology to head up their mathematics department. In 2014, only 2 years later, promoted to the Dean of Science, and in 2020 became a Vice President at the university. Ladies and gentlemen, we're very fortunate to have him today. Please welcome for the Hong Kong University of Science and Technology, Vice President and Professor Wang Yang. Thank you. Great to have you out here today.
Thank you. You are doing really, you should be giving my speech.
No. Thank you. Yep.
好。
About on this stage, so get ready for him, ladies and gentlemen. Here he
女
comes.
士们、先生们，我把舞台交给杨教授。好，大家好，我其实是有点紧张的，因为我要上台来演讲。那么其实今天我收到的这样一个信息是我要着商务装，但是突然我进入到这个会议室的时候，发现很多人都是穿 T 恤的。 所以我今天有点穿的过于隆重了，是吗？那不管怎么样，然后我们的这个主办方有说，要用一下幻灯片，但后来我听过那个史蒂夫·乔布斯曾经说过，如果你真的要向观众传递一些信息，那就不应该使用 PPT， 因为有的时候 PPT 都不知道到底 想要表达什么样的信息？那么上一轮的这个讨论稍微延迟了20分钟，所以我就会尽快的来去结束我的演讲。那今天我的主题是关于 RWA。
in Hong Kong last year, and actually carried to the beginning of this year. One is AI. AI is one of the hottest word large language models in the world. Okay. The other is Web3, and in Web3. The trend today, there will be a lot of talking about RWA. So I want to begin my speech by giving a couple of stories. Okay, so how many of you know this particular mobile phone brand called Techno? How many of you actually know? 传音, okay, anybody? Okay, so Techno, a lot of people, if you're not from China, you may not know about, you may not have heard about this mobile phone brand, okay? But Techno is actually the large, it's a brand that has taken over Africa and parts of South America by storm, okay? So if you go to Africa, probably 1 out of every, 3 out of every 4 people would be using a phone from Techno. Okay. And so I was fortunate enough to meet, some senior management in Techno. And, we chatted a little bit. And I was always wondering, what do you do when you receive, you sell a phone in Zimbabwe? Okay. I have a note from a currency note from Zimbabwe, which is, I think, 1,000 billion. Okay, I mean, you probably have one. Then I thought I made, I was a billionaire, and then turned out it's worth only like 1 cent. So this was the situation for Techno, and in fact. They also sold some phones in Argentina, and we know what happened to the pesos, Argentina. Okay? So, to my surprise, they told me something I completely did not know. And for those of you who actually know what this company Techno is about, they are actually one of the largest coffee suppliers in China. Okay? Well, why is that? Because the currencies they obtained from Africa are often useless, or not useless, but certainly they will depreciate due to inflation, and it could not be used in many places. So they changed the currency. Essentially, they were using coffee. They actually exchanged technophone to coffee beans, and coffee beans to something else they need. Okay, and the other story I want to tell was I went to Zhejiang province. Well, you all know Zhejiang province in China. You all know this place called the Yiwu, right? Your card here, this guy is most likely made by Yiwu. And your Donald Trump hat, the MAGA hat, also the American flag you use, that's almost certainly made in Yiwu. Okay, so I know Donald Trump hat was made in Yiwu. Okay, so I talked to the Commerce Department in Yiwu, and they told me that for whatever they sold to South America, to Africa, to Belt and Road countries, they could only take back about half of the proceed in hard currency. Okay, the rest are in currencies they deem as completely useless or not very valuable, like Argentina pesos, for example. Okay, so they want to find a way to solve that problem, and so the guy told me, all these countries have many things we want to have. Well, China needs, but EU doesn't need. Okay? So they could not do what Techno was doing, or to exchange their phone to coffee beans. Okay? They didn't. It's because EU is a characteristic. EU was there were many small manufacturers and companies. They didn't. It's not a big company that can build a supply chain for these kind of things. Okay, so that got me, us all thinking. In fact, we have been thinking about this long before I talked to them. I was just trying to see what kind of things blockchain technology and Web3, can actually solve. And one of the, obviously RWA, in my view, is a way to solve such problems, or at least is a way going into the future. Okay. Now, we are in Hong Kong. We have been making steady progress in blockchain, in crypto. In fact, the panel today and also Duncan's speech already made it very clear. Okay. However, if you look at what Hong Kong has been doing, we're still much focused on regulatory framework. We're still focused on Bitcoin, exchanges and everything. But I think Hong Kong needs a much bigger vision. Okay. So I always tell people. There is a movie, 007 movie called A License to Kill. Okay, in Hong Kong, everybody is talking about license, getting a license, getting the number 7 license, number 4 license, or whatever, and I call that a license to be killed. Okay, so once you get licensed, you are bound to lose millions every month. Okay, so we have to go beyond that, and Duncan and I actually have been pushing this kind of thing. We need to think forward, and we have to make sure that the blockchain technology, all the crypto technology that has been developed are used to combine with real-world asset and real-world economy. Okay, so RWA offers so many advantages that Hong Kong should position itself to be a leader. In fact, this is a trend I don't think is going to stop. In fact, if we are not acting, I'm not just talking about Hong Kong, I think Singapore, I think, all the other places, we really need to get together to think about how we can go beyond just cryptos and to connect blockchain technology to the real world economy. And that will give a new life to the Web3 world and to the crypto community. Okay, and it is happening. Okay, and it is happening. In fact, I think eventually it will be the mainstay of the blockchain technology. I've been thinking so many advantages we can have through the RWA tokenization. For example, when Techno bought all these coffee, okay, you can of course you can talk about coffee beans, the future sold in the Chicago Mercantile Exchange. I look at it, okay, coffee beans, two kinds, Arabica and Robusta. Okay, so the good ones are Arabica. The cheaper ones are Robusta. But actually, since I'm a coffee drinker, I actually know that coffee differs from place to place, from village to village. In fact, coffee from Brazil is very different from coffee from Ethiopia, from the Guji region, from the Yegashef region, for example. Okay, and in Brazil you have so many different coffee plantations, and that are also offer different coffee. So coffee beans are very different, and that if you just group them under one, that's just not right. Okay, in fact, if we have a mature RWA tokenization mechanism and trade these on blockchains, you can actually have, you can allow even a small plantation to exchange, to sell or to trade their coffee in a very unique way. Okay, let me just put it that way. Okay. And so China in particular, I think in this part of the world, we have seen the deterioration of geopolitical situation. I mean, Hong Kong is well positioned to actually be at the forefront of tokenization, of RWA tokenization. And I think this will also be a way to address the problems I mentioned earlier. For example, in Argentina, they have many natural resources. In Africa, when I talk to people in Africa, they all feel that this tokenization is a way to go for Africa to lift its way out of the current situation, the economic poverty in many regions in Africa. Okay, so I think we have a unique opportunity here. In fact, we are at a crossroad. I just hope that all of us will be united together to develop this area that I think is going to help the world. It's going to help, certainly it's going to help Hong Kong, and it's certainly going to be to help the Belt and Road in China. Okay, and so I will pretty much end here. And finally, I'd like to thank Ethan and you for the kind invitation. I also like to thank you for having the patience of listening to me. And now I guess everybody is longing for a real nice cup of coffee. I'll stop here. And for those of you who are not from Hong Kong, I also welcome you to Hong Kong. I'm from Hong Kong University of Science Technology. It's a young university, but it's very well. It's very highly ranked, and I hope that you will have a chance to visit us. In fact, I'm all looking for collaborative opportunities with many of you. In fact, I visited many companies listed probably here, and in my university, we also have a lot of people in doing this particular area. So love to have opportunity to work with you guys. Thank you very much. Okay, yeah.
Want to meet and talk with you? Fantastic. So you will have an opportunity to meet with the professor if you like. The coffee break is very short. It's only 10 minutes. Please leave your translation sets in your seats. We're going to be back here in 10 minutes with Kevin Lee, the CEO of Gate.hk. On the premier stage right now, Amazon Web Services. is talking about safeguarding your algorithmic trading platform on AWS. And in the Premier 3 room, we have ABEX, and they are talking about making the most of artificial intelligence and machine learning to max out your trading results. So, but you want to be back here in 10 minutes for Kevin Lee. Please, coffee, drinks, networking, make it happen, people. This is Liquidity 2024. Thank you. All right, here we go. All right, we are back at Liquidity 2024, people, and ready for more action right up here on the main stage. We are bringing to you now the man from Gate.hk, the CEO, Kevin Lee, and he's going to be talking about the future of our industry. We are shaping tomorrow right here on this stage, and he is the man to talk about it. He has flowed between finance and tech. You know, JP Morgan, Chase, Macquarie, BNP Paribas launched tech companies into Hong Kong. And then he was the head of sales with one of the OGs of crypto in Hong Kong, OSL, before beginning this journey as the CEO at Gate.hk. So ladies and gentlemen, let's give it up. Get ready for Kevin Lee. Yeah.
Hello, everyone. Morning. We overrun a little bit, so I'll make it quick. My name is Kevin. I'm the CEO of Gates.hk. If you already know me, that's good. If you don't, that's not a loss. Unlike this guy. So for those of you who doesn't know this guy, it's your lucky day, because I'm gonna make an intro. This guy, well, also, I don't want to make stupid people famous, right? So I'm gonna just call him he who must not be named. He who must not be named actually been working in crypto in Hong Kong for exactly 2 months, opened an office in Central for 9 days before he got arrested. Well, yeah, and also credits to the SFC and the Hong Kong Police Force for actually proactively getting this done, right? Enforcing the laws. And I'm not actually saying it just because I want the trading license. That's the thing, right? So how the hell this guy to actually be the most well-known person, and I didn't make it up, right? So every 10 persons in Hong Kong, 4 of them would name him before anyone here in this room as the one that's working in crypto right now. How do we know? I did it. I asked around. And of those 4 persons, one of them is my mom. I was like, Mom, look, I am the CEO of one of the 23 platforms that actually submitted the license, play the rules, you know, trying to do something for Hong Kong, right? And you name this guy after your son? That's crazy, right? So for those of you who think this is funny, this is not funny. We should be like angry. We should be annoyed at least, right? Why? This is something that's wrong. On the other hand, look at today, right? Look at all this, sorry, I couldn't put everyone's on this. That we're gonna spend me 5 hours actually preparing for the slides. But look at the people that we have today. Angelina Kwan's probably one of the most, knowledgeable and affectionate person I've met in crypto. Kara's probably single-handedly pioneered the foundations of the regulations in Hong Kong for virtual asset. Even Lennis here's the brain and the look of the other exchange that I cannot mention. Taka-san, also from Cooper, also the brain and the looks. Actually, that's surprisingly a lot of good-looking people in crypto. And even Duncan was here on the stage. We all know Duncan, right? He's probably the most recognized person in our community right now. And I still think he's not getting enough credit for what he does. I have a little story about Duncan, right? So he got elected legislative councillor 2 years ago. So that's like mid-December, right? It's just like end of the year, everything is actually assuming the office at the 1st of January. So in that 15 days, right, between Christmas and everything, he organized an event, and that's how we first met. He could have just, take it easy, start when the new year starts. No, he start right off the bat and start meeting people in the industry. That's how everyone's here on the slides and in this room and in the room behind actually working for this industry. I think everyone here deserves a round of applause to, to yourself, right? So, and remember that that's what is the sound of an echo chamber. That's not going anywhere. It's just still us, right? What happened? There's something wrong, right? Everyone outside of Pacific Place right now still think he who must not be named is the guy. No one actually thought we are the guys, right? There's a problem. We don't have a problem with the lack of talents. We have a problem with the lack of what I would call a lack of talent liquidity, visibility. That's the thing. Now for 17 years, 18 years of my career, the majority of the time is about execution and trading, right? And it's like only 3 things. It's pretty easy, right? We can summarize by like price, time, and volume. So liquidity, like what we talk about today, is like literally 1/3 of my career time. Now, that's the thing, right? We all know about all these liquidity things. I don't have to go on, like, talk about algo trading, dark pool, IOIs, block trading, all the fancy stuff. We all know it by now, right? Smart order routing. We don't have to talk about this. But the fundamental ideas behind it, I was just, like, thinking about what I've done for Gates in the last year. It's very similar in a sense that I want to do it for people. Think about it, right? So when you're approaching a person, you want to identify and differentiate whether or not it's like legitimate. If you come to me, it's like, I want to market make, that's great, let's talk, right? If you come to me saying you do on-chain layer 2, zero knowledge proof metaverse in Argentina, I can't really, start a conversation with you, right? We have to differentiate and talk to the right people. And also, match and facilitate, right? So I can't, like for Gates, I can't do business with every one of you here. But what I can do is, I know someone that will be interested in your business. I will be the middleman to connect you guys. That's how we do it for the community. And also, most importantly, I think, is the aggregations and how we propagate from here, from this echo chamber, right? So aggregate, what does it mean? I very specifically, there's a reason I mentioned Lennis from the other exchange that I cannot mention. Because in Hong Kong, the market is so small right now, but the potential market is going to be so big. Everyone here in this room can still help each other, and we can all still flourish. We don't have to cutthroat yet, right? Probably like 5 years, 10 years down the road, and hopefully all of us already retired. Now that's what I said about aggregation and propagate. How should we do it? How should we do it from here in this conference hall to people outside, right? And then we only, I think that's one thing. So Adrian Light from Newman Group actually mentioned just a week ago, just really resonate with me. He said, in Web3, we don't have to always make money. I know every one of you make a lot of money, more than I do. But then outside of making money, we can do more, right? For Newman, they're doing more cultural stuff. For Gates, we're doing a lot of like educations, charity, and we do charity not for crypto, right? We do charity, we do genuine charity. We don't go to some shui po and locking the door, visiting family and say, have you heard of the second coming of Bitcoin? No. We want to do more genuine effort to help the community in Hong Kong because we can. We have the bandwidth, we can do it as a liquidity thing. And you're asking, Kev, are you thinking too much? Are you dreaming? Is it really the right industry? Is Hong Kong really the right time, right place? I know. Think about this, right? In Hong Kong, back in 1970s, we're at the top. Not crypto, not finance, not tourism, toys, production and export. And then watches. And then clothing and textile industry. Actually, 45% of the workforce back in the days actually worked in the clothing industry. And when that changed, when that industry changed and like start slowing down, were they saying Hong Kong is dying? Well, they probably did say that. But we didn't die, right? And for what reason? It's not about like some new natural resources we found that would help our, IPO industry. No, it's all about the talents. It's all about all of you here. That's how we started. And surely today we talk about something else. We talk about the cargo industries, slowing down. IPO, we have less in the stock market. Hang Seng Index not doing that great. Can I have a little bit of dream saying maybe crypto is the way? Maybe with all of your help, crypto can become the industry, not only leading Asia, but leading the world and leading Hong Kong, right? Be the industry in Hong Kong. Now, I didn't mention Sean in the last slides. I want to mention Sean's here. JW Marriott is a very special place. This conference hall is very special for me. That's a special meaning. And not because I got married here. Well, actually, since it's on the record, let me take it back. It's totally about I got married here in this conference hall, but not relevant to the point that I'm going to make after. The point I'm going to make is this is important. This has a special meaning for me because in the equities world, in my old life, there's an Asia-Pacific Trading Summit that's happened here every year for more than a decade already. Exactly the same setup, exactly the same style. And funny enough, last year, I'll just pull up the pictures. We actually have Sean Lawrence actually on the stage. We have like Pamela from Talos actually on the stage. Daniel's on the stage, Vin's on the stage, David Chipman's on the stage. A lot of us already starting to do this publication thing. We're trying to go further. We want to get involved in the traditional finance. We want to talk to the institutional clients. But naturally, and rightfully so, they only have one panel for the whole equities full-day conference, right? But today, it's different. It's different, right? Of course, we say this is a bull market event. But also, this is more than just a bull market event, right? This is, to me, a little bit of sentiments, but also how we see eye to eyes to the traditional market for the very first time. For the very first time, I don't know if this is going to continue to have more year in this same conference hall, and then we will have another decade, 2 decades, and we all look back, right? Again, hopefully we all retire when we look back. When we look back and say, wow, we started history. We started to do something great from here. In 2006, in Time magazine, you actually named the person of the year. Well, if you're born after 2006, then it will be everyone next to you, but not you. Now, that was the time when the Web 2 actually started. Everyone can contribute to the internet, uploading YouTube videos, doing blogs and everything, MySpace or Facebook, I don't know. I was too young back then. But I think if the Time magazine gonna nominate you again as the person of the year, this year will be the best year again. The thing is, we can all contribute to everything I said just now, right? And I'm not trying to, endorse idolism in this space. I know we have a lot of idols. We were just like, but for what you do individually for this industry, I think we deserve recognition. We deserve to spread the news outward, right? And in Web3, we talk about ownership. You own a piece of this thing. And I talk to my compliance, talk to my marketing team people. Like today, am I going to sell product? I'm not going to sell product. I'm not going to sell service. I'm selling you a story. And this story, and hopefully it's going to start with all of you here, right? The story going to start with this conference hall at this event. And I think LTP and Gates make the right decision, bringing everyone's here together, have this chance to make history, and we'll start with you, 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 and you. Thank you very much, everyone.
All right, thank you very much, Kevin. Fantastic. It's giving you a perspective on what is coming in the future. It's time to talk liquidity and capital efficiency up here on the main stage at Liquidity 2024. And the panel that we have coming up, marshaling their forces, preparing themselves to come up here and wow you guys, has got a double SAM. We're going to start with a SAM and end with a SAM. No, not surface-to-air missiles, but no less exciting. We're going to welcome up on this stage the senior market reporter for CoinDesk. Sam Reynolds is going to be the moderator for this panel, pulling it all together. Sitting next to him will be Jamil Nazarali, who is the CEO at EDX. Blowing things up, the man from Bitstamp. We're going to have the head of business development, James Cow, is going to be joining the stage. Right next to him, Neil Thomas. Neil Thomas is the chief commercial officer with Asia Next. Thrilled to have him today. Also, the big man, Konstantin Shulga, is going to be joining us. He's from Finery Markets, where he is the CEO and co-founder of that organization. And I said we'd start with a Sam and end with a Sam. The final one will be Sam Sandiford. He's the head of products and institutional business development with BitMEX. And that is your panel. It's all up here, and now it's coming right up on this stage. Sam, and Co., let's do this. All right, go get him, guys. Jamil, fantastic. All right, Mr. Cow, hey, fantastic. Go get him, guys. Constantine, great. And Sam.
All right, thanks so much. So yeah, so you have two Sams on the panel, but no Sam Bankman-Fried, thankfully. And look, these guys are all, ex-TradFi. They came to crypto because crypto is exciting, and crypto really is the future of finance. And right now, we have Bitcoin at 67.8 thousand, according to the CoinDesk indices number. It's been a wild ride. We're in a bull market, but is this an efficient market? And that is our panel today. And so let's start with that. I mean, right now we have this big, huge crew of retail investors coming into the market. And Jamil, it's pretty expensive for retail folks to actually buy Bitcoin. Does that mean that it's not efficient right now?
Yeah, I mean, I think the cost to buy and sell is actually a great measure of efficiency. And let me throw out some numbers for you. And these numbers have actually come down just over the last 2 or 3 years. But today, if I'm a retail investor and I want to buy and sell $1,000 of Bitcoin, and I'm not going to name the exchange, but a very major exchange, and these are competitive prices, it will cost me about 50 basis points in spread and a couple dollars in commission. Okay? If I were to do that same trade in a U.S. stock, that same trade would cost me about 2 basis points.
Okay.
Now, with the advent of ETFs, that's brought down these costs quite a bit. So the average Bitcoin ETF in the U.S. over the last couple of months, volume weighted,
remember all 6 people.
Has
name, title,
has a spread of about
in order
8 basis points. Yeah. So what does that all mean? Okay, what does that mean?
Not easy.
If I'm a retail investor and I want to buy $1,000 of Bitcoin and immediately sell it, if the price has not moved, and I do that trade on a major exchange, it's going to cost me about $15 in spread and commission. If I do that in an ETF, it's going to cost me about $1.50.
Okay.
And if I do that in a U.S. equity, it's going to cost me about 40 cents.
Wow.
Okay. So $15 to 40 cents. Now, that efficiency in U.S. equities
this is the last one before
overnight.
lunch.
It happened
we'll try
over
to
a number
start
of years.
on time after
and
lunch.
you're seeing that in Bitcoin.
We'll see how long these guys run. But
in the cryptocurrency
what's the lunch?
market. So
not
is it efficient? No.
Just stand
it's
up
getting
buffet,
there.
right?
As many people pointed out, it's still a nascent asset class, and so we're actually doing pretty well 15 years in.
Okay. Now, Konstantin, you were saying earlier that people don't actually care that much in the retail sector because you have FOMO, you have this excitement, you have an asset class that everyone wants to get into, and you were saying earlier that folks don't actually care that much about these costs. Is that true?
Partly, yes, and that would be quite contradictory. So my background is in TradFi, and I was quite lucky to spend like 10 years in the institutional side, and for the 5 years I was running one of the largest EM retail brokers on the equity side. And we did a few studies, which I think might be quite insightful for some of the retail exchanges or retail brokers, is when you ask directly a retail client to rank like what are the top 3 or the top 5 considerations when they choose the trading venue or a broker, they will definitely tell you that the cost, the spread or the price or the fee they pay would be like the top 1 or the top 2 considerations for them. But on the contrary, we did a lot of the A/B testing when we actually changed the pricing for multiple client groups, and that had almost zero impact on the amount they trade. So I'm not talking about like 0.5% of the fee versus like a BIP. That would definitely make a difference. But if we're talking about like 3 versus 5 or like 3 versus 10 bips, sometimes that is not the most important thing, and that would be quite contradictory, I think. But the question is, what is important?
Yeah.
And I think for the retail investors, it's the user experience that their broker can bring to them, which includes a lot of things, like the number of instruments they can get through their single mobile app. How entertaining is that? And going back to Robinhood, what they did is not only the like execution free, like no fee trading, but they did a lot of gamification. It's like the way you trade there, the way you buy there, they have some nice and shiny like gamification or like, you know, some visual effects, and that what actually helps to drive more volume. It attaches the retail client most, and that's what like we were seeing and observed on our retail base of around like 5 million users out there.
Is that a good thing though, right? Because do you really want this whole market gamified? Doesn't that mean we'll have more shit coins and meme coins?
That's what I'll be extremely honest here, that's how most of the retail brokers are making their money. Because like if the client trades more, this is exactly what brings more volume. Is it good or bad? I mean, it's not us to judge here today,
Sure, yeah.
but this is part of the game.
Okay, Jamil, any more thoughts on this?
Yeah, so a couple thoughts. I agree with everything Konstantin said. There's a disconnect between what retail investors say and what they actually do. Part of that disconnect is because they don't really understand. So they understand commissions, but they don't really understand spreads. And when you change the spreads, it's not necessarily transparent to them. But one of the things that I'm really optimistic about is we've seen in other asset classes, as the asset class becomes more efficient, volumes grow. So you saw three really big examples of that in the US, right? In the late 70s, when fixed commissions were abolished, volumes just grew rapidly on exchanges. Then in the early 2000s, when you went to decimalization, volumes again grew very, very dramatically. And then several years ago, when Schwab and the other online brokers got rid of their commissions based on what Robinhood was doing, then again you saw volumes just grow very, very dramatically. So right now we see huge volumes in Bitcoin. I think as the market becomes more efficient, those volumes are going to grow even more, and that's actually very exciting.
Okay, for sure. So we're at 67.8K Bitcoin. A month ago, it was half that, right? It's been a very exciting market. BitNext, Sam. So what's next in the market, do you think? You know, do you think we'll have now 80K, 100K Bitcoin? Like, what is stopping us from getting to that point, do you think?
So I think we're heading north in the 3 to 6 month kind of time scale. What happens around the halving, we wait and see. For an exchange like ourselves, volatility is good. Volatility is based on what people's opinion of the market is right now. So we're seeing it higher in the medium to long term, but if we see a correction down towards 50, we wouldn't be totally surprised. ETF buying should put a floor on that, but short-term market activity may actually drive it a little bit lower.
Okay, that makes sense. James, what do you think? You're an old hat to the crypto world. You know, is this different, this market? Is it more efficient, less efficient?
Yeah, I think the ETF flows definitely does put a floor on the market. It's different from other cycles. We talked a little bit earlier about what drives retail behavior. A lot of it is driven through FUD and FOMO and social influences, driving sentiment, driving herd mentality to trade. And you can see typically the liquidity cycle when you have a from the majors, it recycled into maybe layer 2s, into the meme coins. And that usually for other cycles may mean a local top. But I think this time might be different, right? As long as the ETF flows remain positive, I think that will continue to drive the markets upwards.
Okay, but at the same time, right, it's not great to rely just on ETF flows, do you think? Is there more to that than just ETF flows?
Yeah, I think you want to go? Yeah, I mean, there are more and more institutions coming into the space, and there are a variety of reasons. One of that, which is close to our heart at BitStamp is regulations, right?
Yeah.
Do we want to get into that right now?
Sure, why not, yeah.
Yeah, so I think, we're always a big believer in having, balanced and fair regulations, right? Balanced and fair regulations promote, market stability, it protects the participants in the market, it reduces excessive risks. As long as they're fair, it tends to encourage and increase integrity and trust in the market. When you have that, institutions and retail will be more comfortable, the normies will be more comfortable in deploying their capital, and that will then generate more liquidity into the market. If you have the flip side of that, and you have too stringent of regulations, then it limits the participants and it will reduce the liquidity.
Well, I guess the key thing, though, is that normies are fantastic, retail is awesome, but the real money is regulated, right? Institutions and their massive pools of capital can't play in this market unless we have rules, right? Not strict rules, but smart rules and good rules. Neil, what do you think?
Yeah, I think we're at a really interesting time, right? So the intersection between the crypto native world and now institutions coming in, and because I represent that institutional coming in. We're backed by the Swiss Stock Exchange, SBI, who are big institutional players, right? They've been around for a very long time. When you talk about capital efficiency or efficiency in the markets, obviously the retail space, I think the price is very important, the spread and commission. But the sophistication then on how do you really drive not just crypto, but the blockchain technology to create more efficiency into the market is really key. I think Prime, obviously, is one of the big areas. Also, we're sitting at this LTP conference. Cross-margining, I think, is going to be one of the biggest drivers of efficiency in the market. Being able to use collateral across multiple venues, across multiple types of product, that's what institutionals will drive. They want to see how can they don't want any capital at rest. I mean, I was speaking to a hedge fund the other day, and he's like, I can park my margin in US dollar, but I don't have a mandate to move money to cash, right? I need to have this working for me at all time. And one of the things that the new adoption you're getting from the major US buy side, like BlackRock, who have just announced, and obviously Fidelity have something going on as and Franklin Templeton, is they understand that, right? And they think, okay, how can we make sure yield is always available for people who want to trade crypto? So you're looking at the collateral market now with money market funds or tokenized treasuries really coming in. So you've got 5.4% on US treasuries, so you're getting great yield for anything at rest. And now a lot of institutional players have securities license. They understand that. They really know how to work that market. So this convergence between what you've got in the securities environment coming into crypto, I mean, you need the regulation in order to support that. I think the legal construct is going to be the biggest hurdle that crypto needs to clear there. But that really helps. So cross-margining, collateral, which is also always working for you, is going to be one of the critical pieces of creating efficiency in this market. Yeah.
Okay.
So I also want to make like a step back, and besides the ETF itself, what are the key drivers that are actually shifting the landscape because of the institutional demand? So what are the main factors that are driving the institutional demand and impacting the space? So I think we can identify three main factors. The first one is the alpha. So basically, the retail don't care that much, but institutions do care a lot because they need to compete. They need to compete for the client performance and for the client funds. And I'm talking both about the buy side and sell side. And the market is extremely inefficient. So whenever you can show to your clients that you can overperform your peers, that's when it becomes important. And that's what drives the market infrastructure changes and efficiency. So I think this is number one. The second thing is the regulation. And we already talked about that. I think we'll have more impact on the further fragmentation of flows due to the local regulation and the split of liquidity across multiple locally regulated exchanges. And not only exchanges, I'm also talking about the OTC providers and the OTC desks, the brokers. So regulation has a huge impact on the space. And thirdly, it is the efficiency of the market, the way how you can achieve more, I would say, like with the current fragmentation, how you can achieve more like performance for your clients, which also kind of intersects with the alpha. So I think these are the three main topics that will be driving the market space.
Okay. And one is definitely ramps. You know, a year ago, it looked like the biggest ramps in crypto were going to die pretty soon as the US government went to war on crypto banks. But fast forward a year, and ramps still exist. I mean, we're at 67.8K Bitcoin. That means we have ramps to off-ramp to fiat. So I guess the question is, like, what do ramps look like these days? And how do ramps help the market make efficiency? Who wants this one?
Well, I mean, I'll have a stab. I think, you know, obviously the turmoil which happened in banking back in 2023 was difficult. I mean, and you still hear of people getting their accounts closed down in Singapore because they're a crypto organization. But as with regulation comes better governance, comes better risk mitigation, and banks get more comfortable with the business models of some of the newer venues, which allows for better flow, right? So allowing off-ramping into US dollar, particularly out of the US, is much, I mean, obviously there are participants in the US, it's become much easier. And you're seeing major banks now establishing themselves, such as like Standard Chartered, for example, who obviously not under the purview as much of the US regulator, but they're able to offer good services for crypto firms. They have a strategy around that. So I think ramping is going to be one of the big things that really allows capital to flow in and flow out of crypto, and then, but it still remains difficult for banks to really get into crypto because of Basel III restrictions, stuff like that.
Okay.
Yeah, I mean, if I could just add to that, the ramps have not been shut down, but they're still fairly limited, and I think until the large banks are able to get into that and provide many of the services that they do in traditional finance, it's going to limit the institutional adoption, and it's going to limit some of the efficiency gains, because one of the things that drives efficiency gains is scale.
Yeah.
The banks have massive scale across a number of different assets, and they're not going to be able to bring that to bear until, you know, from a regulatory standpoint, they can. And you know, some of the capital requirements that they have to offer crypto is really limiting. So until that gets addressed, I think the efficiency gains are going to be limited.
And I think we talk a lot about, you know, ramps, and a lot of it's centered around the US dollar, right? But if you look around the region, I mean, there's still, the banking relationships are available in each jurisdictions are still fairly limited, right? Until that is unlocked by clear regulations, we're going to see it very difficult for the domestic markets to on-ramp and add liquidity, the domestic liquidity into the crypto space.
cryptocurrencies that Swiss banks provide custodial services for as being bankruptcy remote, that is off balance sheet for the bank. Consequently, our clients, right, our clients for our custodial services, they don't take any counterparty risks against Signum at all. And in the very unlikely situation that something were to happen to us, they would have direct line of sight and certainty towards the ownership of their digital assets. And it's not the case that these sorts of regulations are uniform and global in nature. I think the clients really demand this of us, and they're really much more aware of the nuances between each jurisdiction. And so I think the banking world will have to continue to play catch up. I think banks in Switzerland and other geographies where there's much more regulatory clarity will continue to also be able to offer the full range of services that the Web3 and crypto industry demands, much better than banks that are operating in jurisdictions where there's a lot more legal ambiguity.
Yeah. I'll say something that's a little bit different from everybody else. I think the banks generally, if you're an institutional investor and you're going to a bank and say, hey, I want to trade crypto, I mean, obviously they're not going to provide you that access. They are dabbling with a lot of the tokenization of real-world assets, et cetera. That's an area that they can really compete in because that's what they're known to be doing anyway. So if they come to a custodian like Copper or whoever it is, they want to be able to access different crypto services through us. Basically, if they want to bring in fiat into crypto, they will need the channel to convert that crypto into fiat. At this point, most of the digital asset custodians have been regulated one way or another to offer that banking rail. I think the next step right now is how do you get just fiat people who couldn't touch crypto to get into crypto in a different way. I think a lot of the institutional investors that do have the authority or got the authority to trade crypto has already gone into this space. And we have seen a lot of the participants that we've seen in the past bull markets come into crypto and trading a lot more during this bull market. But how do we get the next level of people come in? I've had a few clients, even in the past bull market that came to us and said, look, I want to trade crypto, but I'm not allowed to touch crypto. I just have fiat. How can I get into crypto that way? One answer is you can go to prime brokers. Some can offer that type of service where clients can onboard with them, give them the fiat, and then start trading crypto based on their balance sheet. As a custodian, we have to start to innovate in a way that we can bring that fiat money into crypto in a more creative way. One of the things that including us, are starting to think about is how do we kind of dip into more of the TradFi rails, getting a securities broker's license somewhere so that people can come in through fiat using that rail, not just with fiat, but maybe with like U.S. Treasuries or other securities, using that as collateral to bring in, converting that into crypto, and then trading in the crypto space. So I think that there's, rather than just relying on banking services to kind of get into crypto, I think the crypto industry are and will continue to innovate in a way that we can become a conduit between the crypto and the TradFi space.
Yeah. Actually, some crypto institutions, they even try to acquire some banks, right? But in different countries, the situation are very different, and maybe the government may stop this action. Yeah. So my next question is, what do you think the retail and institution clients, crypto clients, to face the problem from the banking system and how to solve it? So. John, first, thank you.
Yeah, I mean, I think Gerald hit on it straight away. I think for institutions, I'll speak from the institutional perspective, that's really kind of the core of what we are. Counterparty risk is extremely important. Now with SBF behind bars, people and the market has kind of rallied to a point where we've seen all-time highs again. People forgot about counterparty risk again.
That's all anybody wanted to talk about in the post-FTX world. The first 6 months is proof of reserves, and now we need to look at liabilities, and we need to get all this information. We need it right now, and it needs to be a prerequisite to doing business. That was true for 6 months, and now people have forgotten. Right? That risk hasn't gone away. That risk is still out there. It might have gotten pushed into different corners of the business. We do liquidity provision, and we make markets and a whole bunch of exchanges. We bear a lot of that counterparty risk, and there is not a great solution in the market that exists today. That's a really important thing that needs to get solved. I think it's actually incumbent a little bit on the market participants to speak with a voice and to put the right pressure, commercial pressure, on exchanges, on our custody partners to solve as an industry. Because I do think for real direct coin investment from real money institutions, I'm talking endowments and pension funds, like the real deep pool of real money, these things need to be solved science before they're ever going to make an investment. They might invest in a fund vehicle that bears that risk, or they might pay a very high premium for an insurance against that risk. But until those things are solved, the industry is not going to attract direct capital investment from real institutions. So I think that's a really important thing that I think we need to continue to keep top of mind as we progress on this journey. I actually think that the easiest on-ramp for anybody now is an ETF. The ETF adoption is, and like there were ETFs before the U.S. had an ETF. Okay, I'm aware of that. But that BlackRock did not have their name attached to any of those things. Those things are transformative in the way people view our space, and they start to bring the world of traditional finance and our space together. Right? You can go and buy an ETF at Goldman Sachs and get leverage on it. Right? That gives you access to traditional capital markets in a way that did not exist. Right? We spend a lot of time worrying about financing our business and kind of growing capital and borrowing capital against our asset base. Crypto's a closed system, very much in the financing world, and until some of these solutions become more integrated and there's more product offering, and we solve some of these sort of industrial challenges, it's going to remain a somewhat closed system.
I actually think when you say counterparty risk, it's not rather crypto is immature and traditional industries is more mature. Actually, the difference between, say, Bitcoin versus fiat is there's no backstop, right? If something goes wrong, if you're talking about fiat, and banks do mess up. You've seen people forget, right? Like financial institutions have had various different issues with AML, various issues with mismanagement, with incorrect management on their balance sheet, and ultimately allow bankruptcy. But the difference is when a bank, hopefully they're globally significant or domestically significant, if something happened to them that is mismanaged, there is always the backstop, which is the government that would then later on decides to, in some shape or form, rescue the particular bank and ultimately allow the customer that additional level of security. When it comes to like digital asset custodian, such mechanism does not exist, which means that the hurdle actually is much higher because they're all bearer instruments, right? So I think a lot of the comparison between, a bank is much more safer, people often forget that actually bank is way more leveraged, right? You think about versus a traditional exchange or a custodian. A bank has way more financial instruments that they're managing that's built on top of the underlying deposits. So from a risk perspective, actually, like a traditional digital asset custodian has no leverage, right? Like I'm sure if you ask like Taka and you and Abel, like how much leverage do you guys offer on the back of the customer asset, it'll be zero, right? So I think that's where things are really different on counterparty risks. But I would say the one thing that is getting a lot more attention now is that conversion between asset to the exposure, which is the Bitcoin ETF, but settled in a fiat currency, which then you do get to receive the guarantees or the trust you have to the fiat system.
I think it's a really good point, actually. I'll just elaborate a bit more on what Amy just mentioned and John as well. And we were talking about it behind, right? Because that question, post-FTX, still is as relevant today as it was back then. And having a walled ecosystem maybe is not the way forward. Right? Because from an institutional point of view, it's no good paying 2x, 3x the fees to 4 different people. So I guess, with the partnership we have with Copper, with what we're doing with other providers as well, hopefully that opens things up a bit more, makes it easier for investors to come in. And to Gerald's point just now, right, when investors do their DDQ, when they ask the difficult operational questions, is the bankruptcy remote structure there? Is there regulatory compliance? Is there insurance? Is there a track record? All these things become more and more important, and they're not going to go away anytime soon as well.
Yeah, at Copper also, we've always been on the forefront of thinking about counterparty risk, and I'm not going to talk about ClearLip anymore, but we've been building these concepts out as much as possible. We've even put it in a trust structure. All the clients' assets are segregated. We've been working across different custodians to make sure that trading is safe from an investor's perspective. We have insurance. All these things are put into place. But in the end, what is more important is, as what Amy said, is we need to have some kind of crossover between the TradFi worlds and the crypto space so that people can settle in fiat or more familiar ways that they're used to. And then I think that right now, crypto is just very isolated within the crypto space, that everything has to be done in crypto. And I think that the next bull market is about kind of crossing over that. ETF is one of that, but we have to think about other infrastructures or concepts about how to remove those barriers between the two worlds so that capital can go in and out fluidly.
Maybe just let me say something in defense of banks and traditional banks or crypto banks in the space, right? I do think that when it comes to counterparty risk, it's true. Banks, depending on the businesses and the services that they offer, can entail some leverage in their capital structure. However, banks also benefit from having very much more direct oversight by regulators. They also have to, hold up regulatory capital against those assets. I think the fact of the matter is that many of the real money investors that John talks about, the ones that we really, want to see and we envisage, coming into the space in the following years and will really help to change the complexion of crypto and greatly accelerate its acceptance as a mainstream asset class. I think those folks are very particular also about the financial institutions that they choose to build crypto exposures through. And I think there's a role, being a bank, having CET1 capital against the assets, and most importantly, the level of trust, real or perceived, that banks have, right, in the minds of these institutional real money investors. It's just a very different order of certainty and magnitude and versus more, maybe more leanly regulated custodians and other sorts of financial institutions. So there is a benefit for the bank. I mean, it's highly and extremely costly, right? We have, for instance, at Signum, north of $100 million US just held aside as regulatory capital requirements that we can't touch and won't touch. But these requirements then that we adhere to help provide that certainty and that safety and that security, right? And reduce counterparty risk in a meaningful way. The other thing I would say though is I think a lot has been said about leverage in the banking system. I think for us, keeping a very watchful eye on the loan-to-deposit ratio, which is a more classical measure of checking how leveraged your bank is something that we are very focused on. So we have an LDR that's probably less than half that of a more traditional Swiss private bank, and we do it quite consciously because we don't want operating in the crypto space as a bank is already quite a interesting and challenging thing to do. We don't want also to cause any undue concern when people look at how we are leveraged and what we offer on the loan side. So we do make a point to keep those ratios well within the green zone, maybe even above and beyond what you would expect from a Swiss private bank.
I want to mention quickly just regulations, because I think it's something in the custody space has been somewhat light, and historically it's very light. It's not a very regulated industry in traditional finance, and so regulators move slowly. Let's call it what it is, and I think a lot of times our industry points the finger and says, oh, they just don't understand, they don't get it. I'm not really there anymore. I think I've engaged enough with MAS, with SFC, with HKMA, with SEC. Certainly, our company has. I don't think it's a lack of understanding. It's a lack of wanting to do something that has unintended consequences, and then ultimately looking really bad in hindsight. And so, they're going to be very deliberate. They're going to be slow, and they need guidance from the market. They need to hear from market participants. They need to hear from vendors and service providers on what their clients are asking for, and they want engagement, and they want a roadmap of, all right, well, what should we do? I would say, at least in this part of the world, I found at least the thinking to be progressive and the action probably not to match that. But it is a little bit incumbent on the industry to drive some of those conversations in the direction of travel on the reg side. I think we're going to have regs around custody in Hong Kong in the not too distant future. That sort of stuff is out there.
But I think the difference people compare is like the end state to while in the beginning of like the financial industry have had hundreds of years of failing and succeeding and failing and rewriting legislations and putting them back in place. Like people talk about this current state of financial institution as if it just came like that, the way digital asset has. And that lessons of learned is through what made them secure, right? And I think our industry is also going through these type of learnings as well, and hopefully learn much faster and doesn't take us 300, 400 years to come up with a proper infrastructure to govern and make sure that it is allowing and suited for our industry. So like people always compare, I always compare the crypto industry a lot of times with like the newer technology regulation, like how regulation is being developed for autonomous driving and how regulation is being developed for data and data laws, right? These are all new tech that is pushing new use cases what the regulator needs to go have clarity on. And I think the nuance actually is like learning from what has worked in the financial services industry and trying to figure out a way that could allow us not make the same mistakes that they've made. And if you look at the situation of FTX, it's precisely the mistakes that the financial old industry has already made before, right? So you could have learned from it, but we didn't, so.
Yeah, FTX, actually, I think maybe when SBF is out of the jail, right? He's a really
20 years later?
Yeah, he's really a big fan of many bankers, I think. And so I think our time is limited. So the last question is, actually we'll know this year is very different, like the ETFs, like the Bitcoin halving, and the more strict regulation, many license for stablecoin for exchanges. So for your company, what do you think about the new situation this year and how to face it? So let's begin here.
Yeah, regardless of all the things that are happening in this space, copper still does see gaps in the market that traditional finance has that crypto doesn't. And one of the things is prime brokerage, and we overseen that. Obviously, LTP is a well-known prime brokerage business in this space. But I think that almost a year and a half ago, when Celsius and all the others collapsed, there's been a huge gap in this lending market, and nobody has really came back in size to provide that leverage. And I think that because of the lack of additional capital into the space, a lot of it's been through like ETFs and all this, that it's been circulating, and we haven't seen more of that. So what we're trying to do at Copper is trying to, because we've been always using custody as a base layer, but also we've been talking about prime services. I mean, we're not doing prime brokerage, which is a very different thing because it's very capital intensive, but as an infrastructure, we can provide the infrastructure for prime brokerage businesses to be able to do what they need to do. So, one of the things I've been really concentrating on is how to get back that capital into this market by using, Copper's clients to make them with like loan only with the trading firm so that they can have additional capital to trade. One of the things that we've also seen with the RWAs, that obviously the secondary market is not something that's going to be built overnight, and it's going to take a lot of time. But what we can do is that because there's a fundamental value for that, why can't we use that as collateral to borrow as well? So we have our securities brokerage license in Abu Dhabi, which we got last year. We're going to try to use that so that we can use RWAs and even traditional securities for collateral so that they can borrow from that and then trade through ClearLoop and other ways that they're looking to trade. So those two things is something that we've been very, very focused on since last year, and then we're trying to roll out this year.
Colin, as you mentioned, the ETFs have been a game changer for our space, and certainly for us, we are seeing a lot more engagement and curiosity by real money investors, by institutional investors, by family offices and the like. However, the lack of access to banking rails continues to be a problem that's endemic to the industry, and it's a global issue faced by anyone here on the market side. So we continue to work closely in partnership with industry to solve these problems, and I think we're very well positioned to engage both market participants but also the regulators to formulate or roll out more responsible regulation to enable the industry to access just very basic and very much needed banking services in a fully regulatory compliant fashion. At the same time, we know that this is not something that Sygnum can undertake by ourselves, and so working with other traditional banks to educate them about crypto use cases, educate them about how they can integrate crypto offerings into their suite of products and services is something that we also focus a lot of time and effort for. Earlier this year, we announced a partnership with Post Finance in Switzerland. It's the third largest or second largest retail bank in Switzerland, 2.4 million customers. And now all of those 2.4 million customers can log on to their e-banking applications on mobile, on web, go to the ATM of Post Finance and actually buy, sell, and hold crypto assets with Sygnum in the back, being a white-labeled service provider. So it's just another example of, I think, how we can bring mainstream banking and financial institutions into the fold. And once they start interacting with crypto, they realize that it's not as spooky or as mysterious or as worrying as they think. I think that will result in the provision of more regulated financial services to everyone in the space, which is something that's much needed.
Great. So I think I'll talk really three main trends that we're seeing and the pain points in these trends. Number one, so talk about ETFs, right? People think trading Bitcoin ETFs is very easy, but if you are a authorized participant or you're a PD in Hong Kong, looking at the workflow that's required for you to communicate with asset issuers, liquidity venues, coin OTC providers, the cash custodian, the crypto custodian, as well as the PD themselves, there's no existing rails between all of these participants, specifically when it comes to Bitcoin ETFs, right? So if you look at what happened in the US and look at the orchestration flows that the US ETFs needed, is very complicated and actually quite inefficient for the market makers because they're effectively short cash every day. So one thing we're doing is taking what everybody loves about Fireblocks, which is Fireblocks Network, taking a lot of the tooling that we already have, and because all the different pieces of the participants are already Fireblocks clients, we will do a orchestration tool that allows these participants to easily communicate with each other, agree on the subscription and redemption flows, as well as then have an audit trail of which that they can collapse the coin leg as well as the cash leg together. So that's one aspect. On the other aspect, I would say is more closer to folks maybe in this room is things around DeFi, right? I think one of the things people always forget in every bull run, after the Bitcoin ETH rally starts to happen, then it spills over into all the DeFi activities. We're seeing tons more adoption now happen in the DeFi space. Clients are expecting the same level of security as they do in the CeFi world now into the DeFi space. So what does that mean? They want to have contract decoding, ability to get very granular control over their smart contract activities. That's something that we already have out and people love us for. The final piece I would talk about is the non-financial use cases, right? So I think one of the things we forgot during the last years is a lot of corporates today are already launching a ton of use cases around loyalty programs, but the new hot topic at the moment is corporates launching stablecoins. Not just banks, but corporates who've got large net in corporate ecosystem where they're paying a lot of money away from within company-to-company settlements, or they've got a very active and a loyal set of customers where now they want to provide additional services to them. So those three things are really areas that we're seeing tons of action happening this year.
I think for us, it's also three sort of main things that come to mind for the year ahead. The first thing would really be the core of what we do, the provision of custody, the provision of wallets, and being good at that, right? So we're obviously a provider for a couple of ETFs in the US, and hopefully we've been framed for a couple in Asia as well. And then the use case gets quite interesting after that, right? Today we're a pure B2B business, but based on the work we've done for, say, Swan Bitcoin, right, where we enable their end users to hold their Bitcoin securely through Swan with Bitcoin infrastructure, we think that's an area that we could develop further to have a full B2B2C model and scale that upfront as well. The second part that I think is going to be really important for us is around what we're doing for our off-exchange settlement network. That's great because we can do both crypto, but we can also do fiat as a regulated custodian. So guess what? You can do crypto to crypto, fiat to fiat, fiat to crypto, crypto to fiat. And I think that makes it quite unique. And for the likes of Galaxy, traders, asset managers, if this works, why would you not want to bring your entire ecosystem into that network as well? The last thing for us that's particularly interesting is the work that we do with coin foundations, right? For a lot of these coin foundations, among the first 3 or 4 checks that they sign, one of them is typically to BitGo, because we will do the work to integrate their mainnet, go live with them upon TGE, and then help their early team members custodize, stake those assets, allow early investors the ability to custodize and stake those assets. And as the unlock comes up, if they want to monetize, liquidate those assets, the Go network, the off-exchange settlement piece, the prime services piece is there to facilitate the entire life cycle for them. So I think these are 3 main areas that we're really excited about, and hopefully over the course of the bull market we see this year and next year, hopefully there'll be a lot more iterations of this from our side to announce as well.
Cool. I know we're kind of running out of time here. I'll try to be brief. I think what we're expecting and a little bit hoping for is more clarity and more change. Clarity in regulation will certainly help us make more investments, looking out a much longer time horizon. More change around things happening in DeFi that are a little bit more structured, a little bit less driven by storytelling, and a little bit more functional. We're getting more and more into DeFi as an organization than we ever have. I think that's a huge area of growth for us, but it has to be done in a way that we can deploy real money. And so that's an area we're really excited about and spending a lot of time. And then look, just scaling what we do to address all the needs of the market. We're a large solutions provider in the trading area, and ultimately that's what we think we're here to do. And getting some clarity will help us be more robust in that effort. I'll leave you with that.
Okay, thank you very much. And so let's end here. And if everyone wants to talk more, you can connect with our guests after the panel. Okay, thank you very much.
Thank you.
Thanks very much, everyone.
All right, and thank you very much to Mr. Wu for running that panel. Good job. All right, here comes the Galaxy. Thank you very much for joining us today, everybody. Taka, great job. All right, we are slimming down this stage a little bit. We had some Bitcoin talk this morning. We're going to have a little bit more now. We are unlocking the potential of Bitcoin by merging traditional assets and the digital asset trading world. We are going to do something a little different. The cameras are going to be turned off. This is an off-the-record session. We recognize that may be hard to police in a room of this size, but we would like to think that people in the digital asset industry have a little bit of honor so far. Not like those people in traditional finance. They're the worst. No, I'm just kidding. But really, so we are calling this a little bit of an off-the-record session. So if you could please respect that, we humbly make the request. So that being said, now you're going to be like, woo, what are they going to be talking about up there? Well, I'll tell you who, and they will tell you the what. It's going to be Robert Liu, who is the Hong Kong digital asset leader for Deloitte, the global consulting giant. They're going to be joined by Clara Chu, who is the founder and CEO of the QReg Advisory, the former gamekeeper, maybe not exactly a poacher, but definitely has proven her chops in that area. And then they're going to be joined by Giovanni Vizioso, who is the global head of cryptocurrency products, our favorite kind of products, and he's coming at us from the CME Group. So ladies and gentlemen, please welcome Robert, Clara, and Giovanni. Hey. All right, there you go. Go get him. Cheers. 1 Inch, and then he is going to be followed right up on here by his next door neighbor, Damon Xu. Damon Xu is the CEO at 1 Token. Edwin Chung is the head of business development at Gate.hk, and to round it out, Ron Yi, named after my favorite Akira Kurosawa film. Ron Yi is the co-founder of Orderly. And with that, Jason Choi, are you ready to roll? Jason Choi, let's do it. Ladies and gentlemen, here comes your panel. Let's make a little noise for him. Jason, take it away. Cheers. All right, Alina, very good. Thank you so much. All right, and here they come. Go get them.
So good afternoon, everyone. It's a great honor to be here on this stage to host this panel and then discuss a very important topic, institutional CeFi and DeFi trading infrastructure, because I mean, crypto start as a decentralized digital asset, and it's all about decentralization, but it's really the institutional money and the participation of institutions that push us to where we are now. So yeah, today I'm very honored to be here and have this session with this great mind. On the panel, we have a representative from the decentralized world, including Chai Ho from 1 Inch, which is the most famous DEX liquidity aggregator. And then we also have Rani from Orderly, which is a liquidity network that's omni-chain. And then we also have a centralized, representative from the centralized world, including admin from Gate, the famous exchange. We also have Damon from 1 Token, which has basically an asset management platform for all crypto digital asset management. And also Alina from Avalocom, which is one of the world's most famous connectivities technology provider. Right. So let's cut to the chase and talk about the topics here, right? So today when we talk about CeFi, DeFi, I did a little bit of research. Today, over the last 24 hours, centralized exchange is trading at 70 billion by volume. In DEX, it is only 70 million. So it's 1,000 times difference, right? So the question is really like, what do we, like, why is this happening, right? Why the centralized exchange has a lot more volume and users than the decentralized exchange? What can we do to further increase the on-chain trading activities? So why don't we start with Cheho, so that you could share some of your perspective?
So why is there such a volume difference? Well, to be honest, I tracked the market data as well. I think the difference is not 1 to 1,000. I think it's much more than that, actually. But it's but I admit that it's still the DeFi volume is much smaller than the CeFi volume. I mean, that's I think it's pretty obvious that it's because of the sophistication of UI and UX, especially. See, I tried this with my own friends, my own family. I try to get them to use their own wallets, like MetaMask, to make their own MetaMask wallet. Hey, try this out. You'll get this free airdrops if you know how to work this out. Doesn't happen, you know. They like the friends of mine who don't know anything about the crypto space. They know how to make the CEX accounts. It's easy, and once they make it, and it's easy to trade on them. But DeFi requires additional knowledge, additional learning and education. And I think that's, so UI UX is definitely the biggest hurdle that's creating this difference in the volume, trading volume. And that's actually one thing that 1 Inch is really working hard on to match the experience of CeFi for the users who use the DeFi, so that we can bring the mass adoption here. So that's definitely one thing. That includes the complexity of creating accounts. In addition to that, and the other UX would be the gas fees, understanding of different chains, because like you switch into a different chain and you don't see any of your assets, and the expected reaction from a typical user or a mass user is that, hey, where'd my fund go? And they'll freak out. So these are the things that need to be addressed, I think, in order for the DeFi trading volume to go up. Because right now, it's really amongst the sophisticated crypto users who understand and who's willing to learn more about the products. So it really has to, the difficulty of UI UX has to really improve to bring more volume towards the DeFi. That's my opinion.
So I totally agree. I mean, like for everyday users, non-crypto people, when they first get into crypto, understanding all these different widgets and gas fee and all this concept is very complicated, and that's definitely the hurdle. Ran, from your perspective, also coming from the decentralized world, what do you think is the biggest hurdle now, and what can we do better?
Yeah, I will agree with a lot of your points. I think one of the things that we're trying to do is called chain abstraction, right? So users should be able to deposit from one chain, some native asset, trade and withdraw from another chain. I think at the end of the day, DeFi has to have the same, if not better, experience as CeFi to be competitive somewhat. I mean, DeFi has very natural advantages such as permissionless listings, transparency, and Web3 tokenomics in rewarding stakeholders in a way that CeFi does not. So I think, but the UX is not good, right? Just even from the onboarding, which wallets are solving, account abstraction, and now like account aggregation and fiat on-ramps to the experience of switching chains, the UX has to be a lot better, right? So I think the day when the UX matches that of CeFi, I think the liquidity will naturally port over, and yeah, I think it's going to be very competitive then, especially with like really good tokenomics and low latency. Yeah.
I think that's very true, right? When we look into different crypto world, you know, if I want to buy BTC with USDT on Tron or on Ethereum, it's going to be a nightmare for most people, especially the institutions, to basically manage the treasury across different chains and buy those assets. And therefore, that's why centralized exchange is winning on that front, because it's deposited in the same exchange. You could pretty much trade any asset on the exchange. But I think Orderly is doing a great job in terms of aggregating those liquidity across multiple chains, so that it make it a lot easier and better for users to basically trade different tokens on different chains. And then I think, Alina, from your perspective, right? So you came from a very traditional finance technology provider perspective. You have seen how technologies have enabled institutions to like trade even like equities, Hong Kong stock, US stock. Like, what's your take on this?
Yeah, thank you. Yes, we've been working with institutional traders using sophisticated strategies, and I can support the message from just like a technical as a technical vendor standpoint. Indeed, we see lots of inquiries to set up infrastructure across different types of exchanges, because sophisticated traders, they tend to use multiple strategies and trade different asset classes. And we've seen some growing trend in terms of inquiries to set up infrastructure to help lower latency to access DeFi exchanges. But I don't remember we've had an inquiry just to set up on a DeFi exchange. It always goes like a CeFi exchange plus DeFi exchange. So it makes me think that institutional traders, sophisticated traders, they trade on different CeFi. They need to access different types of exchanges and not only DeFi.
Cool. Yeah, indeed. So, yeah, I think when we just now we basically talk about decentralized exchange. We need to improve on UX UI. We have to improve on liquidity. We have to improve on like latency and connectivities to have a stronger technology foundation. I think it's also good to then put the spotlight on the centralized player like Gate, because when we talk about decentralized and like DEX and SEX, usually transparency emerges as the one single biggest concern. So I would like to understand from your perspective, Edwin, like how is SEX addressing that transparency topic?
Okay, thanks, Jason. And happy to share. I think take a step back, looking at the difference between CeFi and DeFi. To be blunt, I think there's still, a gap in between. The mass adoption as well as the institution standard has yet to be reached. To the CeFi stage or even TradFi, there's still some stages to meet. So looking at what CeFi has done, or particularly at Gate, what we have seen is that there are a lot more stronger demand in terms of the segregation of assets. This sounds boring terms, but actually this has been emphasized over the past 12, 16 or 18 months. But when I say segregation of assets, actually I can see on two aspects. One is that we have been integrating with a lot of custodians and also prime brokers. What we wanted to achieve is that through the integration with these leading custodians or prime, they can do their own strength while we can keep our own strength, which is trading. Clients can, especially the institutions and family offices, we see that they wanted to keep their assets in a safe, their trusted wallet, trusted custodian, be it a crypto native ones or even the bank-related custody arm. They would continue to be safe and regulated, as well as properly insurance protected, while we can enabling clients can trade through the off-exchange settlement protocol in order to trade through us. So once, I think since last year when we enabled this protocol, we actually see a spike of trading volume from family office and institutions. So that's one we have actually focused it on, and the other one is about the segregate proof of reserve, right? After 2022, we have been seeing a lot of family office as well as investors when they're doing due diligence on us. On some projects, they will be asking us to give us the audit, financials or actually these kind of proof of reserve. So we have been emphasizing to the public that we have 1-to-1 reserve ratio, and also we are one of the pioneer using the Merkle tree data structure, as well as embedding the CK proof in it. What we wanted to achieve is that while the data can be verified, can be transparent, but we don't give up the user privacy. We don't give up on that front. I think that's essential. I'm not trying to say how sexy Gate have been done on this part, but I'm actually seeing this as a norm. This has been a norm for institutions, exchange, and actually what I was expecting, and actually I'm started seeing that DeFi has already moved it to this part in order to get the institution adoption. Once it crossed this institution stage, the big guns are coming into the DeFi space, you start seeing mass adoption. When we see half year back ETF is coming, or was coming at that point of time, big guns already set up the funds, and people publicly can start buying through that. So this is actually, every single step actually counts, and actually these are the progress or the steps that actually CeFi has gone through.
I mean, it's a really great point. As a user of Gate myself as well, I would say I'm very delighted that Gate has taken the initiative to, although they're a centralized entity, but they take the spirit of decentralization, bringing a lot more transparency. Telling people that how much asset is actually being put in their reserve, to know that my asset is being saved. So I think that is how we're gonna do things differently in the crypto blockchain world.
Yeah.
Great. So I think now we have witnessed the emergence of many new protocols that bring breakthroughs in transaction cost, security, and transaction efficiency. So what areas of improvement would you consider to be the most important to drive institutional involvement in this space? So Damon, why don't you share some of your perspective? Yeah.
First, thank you for having me. I mean, actually, about no matter this question or the last one, the key is that, like a DeFi adoption,
I mean, the biggest question is why people, no matter retail or no matter institutional, they want to use DeFi. To be honest, like why people go to NASDAQ, not like other exchanges, is because there are like a unique asset there. So, for example, even today, there are some frontier new bone asset is in DeFi, not in CeFi. So in that case, definitely people go to DeFi. So asset will be like, I would say that the biggest thing for one. The second is like DeFi is safer. Like before FTX and after FTX, definitely people will take difference of the counterparty risk for CeFi. So, but to be honest, for most retail people, they care about easy to use more than risky about a counterparty. So, and not to mention because we have many institution clients, and usually we will ask them, say, whether you will be active in DeFi. And their answer will be, we won't, but their LP has concern about DeFi. So it takes time for mainstream to step by step to know about DeFi. So when LP is like comfortable with DeFi, GP will be much more like flexible. So I would say first, it's definitely take time. Second, it's like, I would say asset. And the third one is suppose, and I believe down the road, there will be another FTX example. If there will be another FTX example, definitely not Gate. I mean, not LTP, but there will be. So next FTX will help DeFi go to better. So definitely their UI, their transaction volume, they need to improve. That's like the essence of the system. Like the CeFi improved themselves, CeFi comparing 10 years ago, different CeFi, right? I believe after 5 years, different CeFi, different DeFi. But it takes time, and it's people need to get scared about their money is safe or not. So they go to DeFi, and there need to be more and more like a frontier, new born asset on DeFi to make people go to DeFi. So that's my point.
I totally agree. I think one thing very attractive about DeFi is really the diversity of the product that you could trade and see in the market, right? Like now we have liquid restaking. You could or invest in like delta neutral vault where it yield synthetic stable coin where you could re-leverage that and therefore that provide a lot bigger type of a lot more variety of investment product for investors to choose from their perspective. Cool. So what about Chai-Ho? What about you? What do you think? What kind of breakthrough is the most important to drive institutional adoption?
Yeah. Well, I think it's regulation. Institutions care much more about the AML risks, KYC of the users that's on the other side of their transactions. So that's definitely something that DeFi is lacking at the moment. And from 1H, we think that the regulated DeFi is destined to come in the future. Not so early, but because I think the regulators are still busy with the CeFi regulations at the moment, but I'm sure it's going to come sooner or later. So we are actually preparing for this regulated DeFi space. As the new protocol we have launched last year called Fusion Protocol is actually perfect preparation for this regulated DeFi, because we aggregate different market makers who have KYB and KYC with us. And we also, at the same time, we also go through rigorous AML checks. There are many other platforms like TRM, Chainalysis, who provide this very sophisticated AML checks and services to us. So we pay quite a large fee to implement this AML risk control measures as well. So once these KYC and AML features are all ready in DeFi space, I'm pretty. I actually think that institutions will be for institutions, the decision to come and play and trade more on DeFi would be much more easier for them.
I see. Great. Great. You mentioned about the point on regulations and compliance, because I mean that has always been a gray area. I don't even think that there's a framework to think about how to regulate and control, or have some sort of protocol to protect the interest on DeFi. I actually want to bounce that question back to Damon, because I understand you guys is a risk management platform, and you probably will have some, what do you see, from a risk management perspective or regulation perspective, like how do you see the path going forward for DeFi? Like, is there anything that is gonna important, or like from your experience learning from the centralized world, is there anything that you believe is important that DeFi needs to have in order to prepare for a regulated future?
It's more on the risk management, this as a perspective, or like overall.
I think it could be on risk, because I would believe risk management is going to be a core part of regulator to make sure investors' interest is protected, but then it could also be overall if there's other points as well.
Yeah, I think for regulator, that's keyword first. For risk management, that's second one. Because for this decentralized protocol, they're transparent enough. So for regulator, it's easy for them to understand, okay, what's in the core that entity, a protocol, what they're running on, right? Because for CeFi, to be honest, even there are, anyway, this is a black box. So so a regulator needs to set up a lot of rules to make sure they don't do everything weird. But for DeFi, it's clear for regulator to see what they are working on. So I would say KYC, AML, that's KYB. That I will say that's the top one, and then the most biggest one. And if we're talking about other like a risk, maybe it's not like a regulator perspective. It's like as a manager perspective, right? They definitely will care about the counterparty risk, whether the protocol itself is safe or not. Personally, if someone asks me, Damon, you can stake money to some different protocol, big concern on my mind, especially this new one, is like whether it's safe or not, whether hacked or not, right? And I don't think today, like the protocol themselves, like put, for example, as a threshold for risk management, like liquidation very aggressively. Most protocol, I will say, okay, it's kind of safe. So for asset manager, in addition to counterparty risk, in addition to regulation risk, in addition to like a hack, these kind of things, then the risk is mainly about the asset manager, the trader, their strategy itself. So to this perspective, that's very similar that they manage the risk, no matter in CeFi or DeFi. So, but back to your question, I will say for regulator, if I was a regulator, I think DeFi is much more easier to regulator than CeFi. If I know everything they're running. So yeah, that's my point.
Totally agree. I mean, as long as they learn how to read Everscan and read the on-chain data, it's actually a lot more transparent than the traditional financial system. Cool. So yeah, we talk about for institutional adoption for more DeFi, like the breakthrough that we need to see is like on the regulation side, on the product variety side. Ran, from your perspective, do you also see other important breakthrough that you think is important to drive institutional adoption of DeFi?
I think everyone's pointed out the biggest pieces. I mean, for us, I think it's still to make it feel like what they're used to, plus the additional, like, let's say, token incentives and the additional transparency, right? That's kind of the trade-off. So, we want to also have, like, off-exchange settlements with custodians and places where institutions want to park assets and they feel safe, right? Not in smart contracts necessarily. So that's one big hurdle. And then obviously the KYC AML layer, which is probably one of the largest hurdles. So for us as an order book, like permission order book perhaps, and yeah, like whitelisted addresses that can interact with each other. These are the things that institutions care about. And then it's the liquidity and the assets that they want. Yeah.
Got it. Thank you. Cool. So yeah, indeed. So I think today's the panel really focused on institutional adoption, in the crypto space, like how we can have more institutional coming in, no matter whether it is centralized finance or decentralized finance. We want more institutional money to come in to pump the market. Hopefully, Bitcoin is going to be moving soon. I think to wrap up the panel, I think the last questions that we really want to discuss is, like, from your experience, each of the panelists, what infrastructure needs to be built better to help institutions get involved in this market? And lady first, why don't we start with Alina?
It's great that a word transparency has been used many times during our panel, because I think one of the drivers should be transparency from infrastructure setup standpoint as well, because institutions have certain requirements towards their infrastructure setup. It's all about optimizing latency, optimizing infrastructure on the hardware level, and from the connectivity standpoint as well. So it should be understandable where the infrastructure is located physically. What is it really matters for institutions, because as we mentioned, they trade on multiple exchanges, and they need to optimize the infrastructure. And the ideal solution for them is to use the same infrastructure, the same servers, the same connectivity to AWS clouds, for example, using the same infrastructure for multiple exchanges and for DeFi as well. So they need to understand the physical location, how this infrastructure for DeFi exchanges, what is behind this infrastructure setup. So the more transparency, the more institutions will adopt DeFi exchanges, trading on DeFi exchanges.
Good. Thank you. And Chad, what do you think? What is the most important infrastructure that needs to be built for institutions?
Yeah, well, as I mentioned, I think it's I'm not sure if you call that infrastructure, but you need more platforms that allows connections between platform where you allow the institutions to trade with counterparties who are AML checked and KYC, and so that you need like a easier API, easier technology, ready for use, readily prepared technology platform that allows the institutions to do this. And I think that's the key part in bringing more institutional participation into DeFi platform. Yeah.
Cool. What about you, Damon?
Yeah, I mean, infrastructure is a big word, right? It's I think all our 4 or 5, we can say each company infrastructure, right? Infrastructure DeFi, infrastructure CeFi, like Avilacom, like trading, and we ourselves like asset management infrastructure. So from my perspective, because these gentlemen already mentioned about this KYC ML, I think from regulation, first, there's definitely a trend for asset management. That more and more institutions, no matter before they are trading team like a prop trade or before they like SMA, they all go to like a more fund structure. So in that case, like auditing, more seriously like data management, like generating report for their LP, no matter government, no matter the auditing, is definitely the one big trend or pressing requirements for, I would say, crypto asset management this ecosystem. So no matter like this like a buy side guy, even today you go to auditor, say I have high frequency trading, I have DeFi, and I have a derivative, whether you can audit me or not. To be honest, most like auditor will say sorry, we don't have the proper infrastructure there. We have the Excel, we have these like auditing tools from the traditional, but we don't have a crypto one. So that's why one token comes. So basically, like we help these guys, no matter like from buy side, admin, or auditor, to help them to easily to do these regulation things, auditing things, to move the institutional market to a little bit forward. So I would say auditing, in addition to like KYC, AML, in addition to like no matter like a third party or no matter like a protocol, but also even though these things are there still need to be infrastructure for software level to support the whole ecosystem to be more regulated on the auditing, transaction management, this perspective.
Cool. Yeah, and Edwin?
Yeah, for me, I just want to sidetrack a little bit. You know, the earlier gentlemen were talking about regulations, and I think so CeFi regulations, especially in Hong Kong, is pretty new, and DeFi, you know, in some space there's actually uncertain. Sidetrack a little bit was this morning I was actually having the closed door meeting with the custom department, or Guan, basically just next door in this conference. So basically, you know, we were sharing all the pain points among the industry peers with regards to the VAOTC, the licensing regime, which is upcoming in Hong Kong. During the discussion, one key takeaway that, you know, the government officials from the custom department was saying that, hey, they are new, they're willing to learn, they're willing to know the industry peers, you know, who they are, and what are the pain points, what are their needs. This actually this morning, the representative coming to us and informing us this is the key message. So what I'm trying to say is that, you know, regulations, while we keep thinking whether we should meet the regulatory standard, but actually, especially perhaps in DeFi space, is that it's too new. It's new that, you know, the government officials or the policy makers wanted to understand more and, you know, help them to help you how to, you know, work things out. If you can address, or say in the DeFi space, you can address all the user privacy, the investor protection, you know, the segregation of assets, how are you going to do so? And the earlier gentleman mentioned about the KYC, how all these AML, CFT ordinance are all put in place. The regulators willing to learn from you, and if you have solutions, you know, your life will be a lot easier in the DeFi space, and you help their life a lot easier as well. So this was a message from this morning. Perhaps that's more on the regulation side, how, you know, I think this should be the way that it should grow, not only in CeFi, but also in DeFi as well. And to answer, you know, Jason's questions about, you know, what else, you know, that can be done or can be leveraged from, I would say running a CeFi is very costly. You know, you need to have the capability in terms of liquidity. You also need to make sure the regulations which I mentioned, you know, is right. And what else is that we see the payment gateway is very important, especially these days during the bull market, everyone's on-ramp and off-ramp. You know, we have been constantly meeting with banking partners or legislative council to talk about all these, you know, banking railways. I think that's also, you know, helping to bridge the institutions and also the retails to start using the crypto, adopting the crypto. That's one on the payment solutions. And also, you know, during the enhancement of the crypto industry, I would say the cross-chain development as well as the cross-margin settlement, these are, you know, very similar to the banking days where I was in. You know, people were trading derivatives, we were trying to make sure the capital utilization is maximized. These are how we started to bring more experts from the TradFi people, you know, to embrace the crypto as a new asset class, to work some solutions which is tailor-made for institutions. And as I said earlier, once the institutions, the traditional ones comes in, you know, this will help more mass adoption, you and I will follow the big players coming into this space. And again, this not only benefit to CeFi, which we have experience from, but also when we start expanding to Web3 wallet, the DeFi wallet, and we also see this pain point and this industry needs. Yeah, cool. That's pretty much.
Thank you. And last but definitely not least, Ren, what would be your take on this?
I think everyone's mentioned all the things to drive institutional adoption, right? I think it's basically what everyone else said. I think on-chain credit, that would be very interesting if we have under-collateralized credit, right? Like in CeFi, we don't have that. That's probably one of the key missing pieces. And then a more broader category would be identity, right? We don't have any identity solutions that are standards currently. If that were to, so that includes the KYC and but even just proving people are humans. I mean, this is a more wider spread problem with like trying to prevent airdrop hunters and such, right? So just identity, ZK identity type of solutions.
Yeah, which I totally agree. I mean, we have been talking about on-chain KYC, on-chain identity for a long time. I think, especially in a regulated world, like multiple jurisdiction, if there's one on-chain thing that could solve all this, like basically do the AML KYC check in one go, I think that would be awesome. So thank you very much. I think to conclude today's panel, I think we have heard of a lot of great ideas about how we could do better on the regulation side, how we can do better on the transparency side. And if we have to summarize it, what I see is really DeFi and CeFi is emerging together. There's a lot of things that DeFi need to learn from CeFi in terms of user experience, in terms of product performance, in terms of education, while CeFi also have a lot of things that could learn from DeFi in terms of transparency, in terms of security, etc. So thank you very much. I think this is exactly why crypto is a one big family. We have this kind of conference. Thank you, LTP and Gate, to have this kind of sharing sessions for us so that we could learn from each other and progress together as an industry. So I definitely have learned a lot today. I hope you also would have learned something today from our panel. Thank you very much for our panelists' time. Thank you.
Thank you very much. Great job, Jason Choi. Ladies and gentlemen, thank you so much for being here. I'll let you guys leave the stage as I close out today's action. Alina, thank you for taming this panel of men. Thank you very much. Sorting them out. Ladies and gentlemen, very quickly to close up, if you are signed up for the VIP party, it starts at 5:30 p.m. on the 7th floor of this hotel, the Fish Bar. If you've been using the simultaneous translation devices, leave them on your chair. You will not break their hearts. Just leave them and walk away. That's perfectly okay. I'd like to thank the hosts, LTP and Gate.io, for inviting me to come and be your host today. I'm Andrew Work, and I'd like to thank our sponsors, who you see up here behind us. AWS, ABEX, Avelicom are my big A's. Asia Next as well. The people at One Token, Copper, Talos, Finery Markets, Orderly Network. Thank you so much to all of them. And hopefully I will see some of you at the after party, co-hosted by Copper. Ladies and gentlemen, that has been Liquidate 2024. We will see you in 2025. 再见!